Did you know that you can claim all of these expenses on your tax return, limited company, own name? As a landlord, you can claim all of these expenses. Watch today's video to find out exactly what you can claim. Welcome back to my YouTube channel. Today we're talking all about expenses and what you can claim. So this applies to your sole trader. So if you're a buy-to-let landlord trading in your own name as a partnership, an LLP, where you're doing a self-assessment tax return, all of this applies to that. And the same principles also apply for when you're doing your limited company accounts as well. So a lot of people are just unsure as to what expenses they can actually claim when it comes to calculating their profits for their property rental business. So a lot of people are aware of the obvious ones, such as letting agents fees, for instance. And what they do is they basically come off your profits. They come off of your revenue, less your expenses to give you your profit. So the more expenses you have, the less profit you have, and as a result, the less tax you'll be paying. So where possible, you want to try and claim as much as possible in expenses, especially if actually you've incurred them as well, so that you're paying the least amount of tax possible. Today I'm going to run through a long list of expenses that you can claim as a buy-to-let landlord, whether it's a limited company or your own name, so make sure you've got a pen and paper handy to scribble these out. Okay, so the obvious ones really, you can claim letting agents fees. So where you've got a letting agent who's managing your property for you and they're charging their 10-15%, well, how much they're charging, you can claim that as an expense, which means it's going to come off of your total rental income and it's going to lower your profits for tax purposes. Other expense, you've got water rates, council tax, utility bills, heating, lighting, insurance, buildings insurance, landlord insurance. All of these, again, fully allowable expenses because you're incurring them wholly and exclusively for the purpose of your business. That's the term there, it's wholly and exclusively. You have incurred this cost, you've paid that money to CIA, your insurance broker, E.ON, your electricity provider, in order for you to make money in the future off of that expenditure, because you're going to basically, you need to expend that money in order to let the property out, get tenants and actually make money. So essentially where you're spending money to make money, that's the whole concept there of wholly and exclusively. Often it's used when you're looking at, say, perhaps like club memberships. If you look at joining a members club, a golf course, you might say, yeah, well, I'm going to potentially meet business suppliers there, meet landlords, things like that. But because it's not wholly and exclusively, it's not exclusively for the purpose of growing your business, because you're going to get some enjoyment out of it as well. You're probably going to get drunk there and have fun there, whereas there's no fun being had when you're spending money with E.ON or getting your insurances set up. Other expenses are allowable, legal fees. So only when it comes to leases of less than a year, or if you're renewing a lease for less than 50 years, that's an allowable expense. When it comes to legal fees that relate to the purchase of a property, they're not an allowable revenue expense. A revenue expense is one in which you deduct from your revenue in order to give you a profit. They're a form of capital expenditure, and what that means is when you come to sell the property later on, that's when you get a tax relief on it. So all of those legal fees that relate to that initial purchase, make sure you keep them somewhere safe so you can claim them in 10, 20, 30 years time when it comes to actually selling the property at a later date. Other examples of allowable expenditure include accountancy fees. If you're paying an accountant to do your tax return, to prepare accounts, to help you with your business, that's absolutely an allowable expense and is going to come off of your taxable profits. Again, rent, service charges, all of these fully allowable expenditure. Travel is an absolutely fantastic one. So a lot of people don't know this, but travel, you can claim 45p a mile for when you're using your own vehicle to visit your own properties. So if you've got a car that you use personally, but you use it occasionally to visit the properties, to visit estate agents, to go on viewings, even going to your accountant's office, networking events, all of these allowable business expenditure. When you're using that car to go for those purposes, you can claim 45p a mile for the first 10,000 miles. And then it's 25p a mile thereafter. So as soon as you've done your first 10,000 miles, all at 45p, then 25p a mile for every mile after that. Again, repairs as well, that's a big one. So where possible, you're going to try and push as much revenue, much expenses through as possible as allowable repairs, because you're going to get tax relief on them now when it comes to setting it against your rental income. Whereas if you think about capital expenditure, you're only going to get tax relief on that when you come to sell the property, and it's probably going to be at a lower rate as well. The capital gains tax rates are 18 and 28%, whereas income tax rates as high as 45%. So you want to get tax relief on the highest possible rate so that you save as much tax as possible. So repairs, new boilers, replacing windows like for like, all of that kind of stuff, as long as there's no element of improvement, as long as you can show that it's a like for like replacement, the house hasn't been improved, then you've got a very good argument it's a repair, it's an allowable expense, and you're saving tax because of it. Other things as well, gas safety certificates, all of that costs, your EICRs, that's allowable expenses, welcome costs, company mobile phones as well, business mobile phones. So if you're using your phone to speak to agents, to speak to tenants, if it's in your own name, so if you're working as a sole trader, landlord or a partnership, and you've already got a phone set up, you can claim a proportion of that running costs. So if you use it 50% for business, 50% for personal, that's great, we'll claim 50% of that. The same is true of your broadband bills as well, any fixtures and assets you've got. So for instance, your iPhone, your iPad, your laptop, all of that kind of stuff. What we can do there is we can take a proportion of the business use and we can claim that as an expense. For limited companies, it's slightly different in that it has to be in the name of the limited company. So if you've got a SIM-only plan or a contract set up, you can't actually claim that because when you started using it for the company, you've not incurred any extra cost because all of those plans tend to be unlimited. But if you do incur any extra costs, for instance, calling overseas, going out of your plan, and you can demonstrate that that was incurred for the purposes of the limited company, you can absolutely claim that as well. Working from home as well, that's another fantastic expense. You can either claim a proportion of your household running costs that you can justifiably and reasonably attribute to you running your business from home. Otherwise, if you want to keep it nice and simple, you can claim the £6 per week flat rate expense, which comes straight off of your tax bill. That's per individual as well. So there's a potential for a good couple of £100 in tax savings just right there alone, using your home as office. A lot of people don't realise this, but it's all these small little tax tips here and there, this expense, this expense here and there, that over the course of 10, 20 years, because remember, that's what we're in business for. We're in business for the long term, that you nail this down right and you start claiming absolutely everything possible, over 10, 20 years, you may well have saved yourself tens of thousands of pounds in tax just by being tax smart today and knowing exactly what expenses you can claim. Other possible expenses, training fees. So all these courses that you're going on to learn how to become a superstar property investor, you can absolutely claim those as well. Networking events, your PPNs, your white boxes, all of these fantastic networking events that get you in rooms with high net worth investors, deal sources, all of that kind of stuff. You can absolutely claim that as an expense, because at the end of the day, you don't go there for fun. You go there to close deals, make money and find properties. So all of that can be absolutely claimed as well. Just make sure you're keeping all your receipts. So it's worth mentioning this is that all receipts you need to be keeping for at least 6 years. Yeah. So whether that's you doing it paper, whatever system works for you. For all of our clients, we provide them with some software called Dext, used to be called Receipt Bank. And what that does is it allows you to take a picture of the receipt and that fully backs it up in the cloud. You know it's fully safe. And if HMRC ever have any questions, open up an inquiry, we can actually just 2 clicks, here's the receipt, thank you very much, on your way now. So definitely make sure you're doing all of that. Same with bank statements as well, and completion statements. That's another one as well. In terms of just general housekeeping, always keep everything. That's the best way to go about it. When we're speaking to clients, even like 1 or 2 years ago, yeah, sorry, we lost the completion statement. I don't know how much I paid in legal fees. I can't quite remember. That's not really that good, because at the end of the day, then we have to try and guess it or basically figure out how we can do it. And as a result, we always have to err on the side of caution and basically go for what we know the legal fees will be at the minimum, just so that we're playing it safe. Whereas if you've got the expenses, if you've got the receipts there fully backed up, you know for a fact exactly how much you paid in legal fees, stamp duty and all of that kind of stuff, so that when it comes to actually selling it and claiming a tax deduction, you're fully covered and you can be paying the least amount of tax as possible. I really hope you guys have enjoyed this video. Let me know if you've got any questions. I know a lot of you guys will have, especially around capital v revenue. I think I've done another video on that previously, but if you've got anything else, any questions on what is capital, what is revenue, let me know in the comments below. Make sure you hit that thumbs up button, but let me know in the comments and I will reply to them all. If not, I'll even do a follow-up video if there's enough meat in the question for me to actually run through it. Thank you very much for watching, guys. Make sure you smash that subscribe button so you get notified as soon as we post another tax saving video. Otherwise, have a great day and stay tax smart.